Bitcoin has erased gains for the year. The stock market's still up. What's going on there? I mean, do you worry about, you know, that is crypto just reacting before and ahead of the stock market, or is there something more kind of specific to the asset? Are we just in a general deleveraging risk off cycle? People going into the holidays, they want to take profit, collect carry for the year, or is there something else going on in a 2026? Is there a broader kind of macro concerns that you have?
Most people are getting it wrong about what's actually driving this recent Bitcoin drawdown, but Raoul Pal has finally come out and broken down exactly what's happening behind the scenes. This is going to be a really interesting video, so make sure you watch until the end to hear his full analysis.
Crypto, there's two different levels. One is go back to its liquidity. So liquidity has hit crypto more than anything else. And that is the FedNet liquidity that has shrunk. So it's hit that. But then we've got OG profit taking we've seen. So that continues. And you've got this pervasive opinion that the 4-year cycle is what it is. And therefore you must sell in November and go, October, November, and go away and come back in, 12 months time. So there's that pervasive feeling. And then I think somewhere there is some damage that was done during the October the 10th flash crash in crypto. Now, I don't know if there's a body there, but my guess is the balance sheets of some of the market makers are impaired. So it means that they can't provide as much liquidity as they have done, which exaggerates price moves. I think that probably makes sense. We're also seeing some unwinding of the token holdings by the DATs because of the construct that they've got. They buy back their equity. So, that's ugly, and that will probably continue if price action continues like this. So you've got this supply going on, less liquidity around because of the Federal Reserve and the Treasury, and less liquidity in markets because of impairment after October 10th. Makes it just feel not great.
Are we just in a general deleveraging risk off cycle? People going into the holidays, they want to take profit, collect carry for the year, or is there something else going on in a 2026?
So on the macro side, the business cycle, which is the main kind of driver of everything, has been very subdued for this entire cycle. And that's been driven by the high rates environment and the liquidity environment. If you, on a forward-looking basis, understanding all of the fiscal stimulus that's coming, plus liquidity stimulus that's coming, and the probability of rate cuts coming, the chances are the business cycle is going to be a lot stronger going into the election year. Don't forget, we've got Scott Bessent running the Treasury. He's an ex-hedge fund manager. He understands this game very well. So I think on a forward-looking basis, it looks great. But what you've got is this liquidity air pocket that means that there's not as much money around. So the people's propensity to take money off the table is higher. People are nervous. I mean, we've seen the fear index in equities be down at like 8, which is insane considering the market's barely off the highs. So it shows you there's some pervasive sense of fear. And so any movement in the market kind of gets exaggerated very quickly. And I think, after the NVIDIA earnings, people just want to quickly take money off the table. And as you say, next week's a US holiday week. Things start calming down as well. And if you've had a decent year, you do want to protect it. Yeah. But normally, end of the year is usually pretty strong. And considering they've got to drain somewhat of the TGA to pay for all of the employees they furloughed, and et cetera, there's a reasonable amount of liquidity that will come into the economy over year end.
Yeah. Do you feel like you're getting paid enough to go far out in the risk spectrum? Crypto is at the farthest end of the risk spectrum. It's been tough in crypto, even though, if you weren't in Bitcoin or a select few names like Hyperliquid, you would have really been down for the year, right? I mean, some of these alts haven't even recovered at all-time high. You talk about traditional hedge fund managers, kind of catching up to the Max 7. How do you think about that into, just being in crypto? Is it just only Bitcoin? Is there a room in a portfolio for alt?
So for me, it depends on your time horizon. I mean, I don't look at it in year-to-year gains. You look at it full cycle gains. Full cycle for me is the business cycle. So it's not necessarily the 4-year Bitcoin cycle. So you look at the gains over the cycle, and over time they compound. So here we've had a year which has been pretty lackluster. It's gone nowhere at Bitcoin level. But at Bitcoin level means that everything below that has underperformed. And I get it. It feels terrible. I've been lucky enough most of the way through. I mean, I haven't been in Bitcoin all cycle. I've managed to outperform it via just having the right asset allocation. Bought Solana at the lows and then switched into Savyy when it had its run. And it's given a bit back. But generally, that's worked fine. I'm not a big fan of going too far out the risk curve. I have this whole don't fuck this up thesis. And a lot of it is every time you think you're really being smart out the risk curve, your probability of success is pretty small. So I tend to stick with layer ones generally because it's definable. I understand the metrics, I understand what drives them. And then, if I look at my wallet of shame from when I've allowed myself to FOMO in on stuff, I allow myself up to 10% of my portfolio to do that. I probably never even get to 10% because it's just not my comfort zone. If I look at it, every single trade I did lost money. I think I've lost near 100% in smoking chicken fish, which was like one of the memes that I held, and I had a reasonable sized position in it. And I thought, I can't get out of it because it's just going to nuke the market anyway. So I wrote it up, wrote it down. But, I treat it like a call option. I knew it was the highest probability chance it was going to be a zero. But, you also don't really understand markets until you participate in the elements of it. Yes. You need to get a feel for what it's about to understand what memes are about, how DeFi works, that kind of stuff. So to have a bit of capital that you're going to nuke to learn is a very good thing to do. Yeah. The real key thing, and I tell everybody to do this, is like, that should only be 10% or less. Then it doesn't matter, and just leave the rest to do its thing. Those drawdowns, again, are driven by liquidity, and Bitcoin is crypto is the most affected by liquidity of all of the risk spectrum of assets. So it tends to go down. It's also an earlier stage, network adoption model, like Amazon went down 95% in its first cycle, stuff like that. Over time, networks, as they get adopted, have less volatility because there's more economic activity and less. And it tends to be stickier over time. So my guess is the next time we have the liquidity down, we will see less of a drawdown in Bitcoin than it was previous cycle. And we've seen that pretty much every cycle, that it's had less of a drawdown. My first cycle, I think Bitcoin was down 87.5% back in 2013. And then it was down less in the next cycle in 2018, whatever. So it kind of fits to me that over time. But when you go further out the risk curve, so if you've got a newer token that's smaller, it's going to fall 90%, as they always do. So I don't think that changes anytime soon.
Today, the Bitcoin market is showing signs of a tentative short-term recovery following a period of strong selling pressure. The recent week saw a significant decline driven by macroeconomic concerns, a strengthening U.S. dollar, and general fear leading to forced sales from short-term holders. However, the cryptocurrency has managed to bounce back and hold above a major psychological level, closing the past week with a consistent upward trend. While this suggests a temporary bullish bias is emerging in the immediate market, this upward move is currently viewed by many as a corrective rebound within a larger, pre-existing bearish structure. For a long-term positive shift, more sustained buying confidence is needed to overcome key resistance zones. The overall sentiment remains cautious. Wish someone taught you Bitcoin earlier? Now's your chance to do better for your kids or young family. This teen ebook is perfect. Link in the description.